We're here in the bunker. It's the Real Money Show. I'm Jeremy Wiseman, and I'm here with my father, Paul Wiseman, and you're listening to the Real Money Show. How you doing, Paul?
I'm doing fine. I'm staying away from everybody.
Okay, that's good. So we've had a lot of questions in the market this week from clients, from potential clients. We've seen a lot of crazy price action happening recently. I'd like to get started exactly with that. Let's talk about the price action in the market. What did you think of all that was happening last week in terms of the prices? I mean, it was pretty crazy there for a while, especially watching what was happening through the wholesaler pricing.
Well, first of all, we had a paper smash down of product that didn't exist.
Right.
At the comics, you know, they're trading as much as 100 times an ounce of gold. So, you know, if you've got an ounce of gold and they go out of business, you're going to get 1/100th value of it if there can be a payout. What was traded, as I said, was paper. It was smashed down. As an example, with the virus that we have right now, everything is basically closed down for 2 weeks. The Royal Canadian Mint is closed down. The US Mint is producing a little bit of product, but that they're on, you know, very, very small shifts. All the Swiss manufacturers, whether it's PAMP, Valcambi, what's the other one that's got the funny name?
Agor Horaeus.
Oh, okay, yeah, they're closed as well in Switzerland. There is no product. We do have product, but the problem is, if I paid $18 an ounce for silver, as an example, when I purchased it, and it's trading at $14.50, I can't place any orders with the wholesalers because they are quoting $19.50 an ounce.
Right.
If that's without any commissions or without any shipping or without anything, that's what they're charging, $19.50 an ounce US. And on the gold, there's a $70 spread for physical product.
You know, we'll definitely be talking about the mint and the refiner closers, but let's go back into that concept with the prices being smashed, the paper, and now where the physical market stands. Because I'm with you. You know, when people say, "Oh, people were selling off to get." They needed liquidity because they had margin calls on the other side. I really don't see that happening. I see people who buy physical precious metals are buying it for a very specific reason. I truly believe that JP Morgan was crazy short in the market, and if they didn't do something about it right then and there, they would have been out billions and billions of dollars. It would have bankrupted them. So that's where I think the price smash went. But you saw that there was a difference between when the price went down to $12, that paper price didn't exist. And people are asking, well, why did the price go down? Well, at that moment, the physical and the paper market broke.
Yeah, I was purchasing product, you know, when it dropped down in the $13 range, and all of a sudden, every website, every wholesaler took their product down. We have, as I said, I have available 100-ounce bars, 10-ounce bars of silver. I have 1-ounce gold bars available, but you're going to pay a huge premium right now because that's what it is. I mean, we've got people knocking. We're not letting anybody into the office, so they can't knock down the door. But there's an awful lot of phone calls where people will pay anything to get hold of the physical. If you go onto eBay, you can't buy silver for $14 and change. They're charging $2,700, $2,900 for a 100-ounce bar.
And I think that's really the takeaway here, because, you know, a week and a half ago, you had people, I was getting text messages and phone calls from friends and clients and everyone saying, why did the price go down? And you're saying, listen, number one, if you look at the exchange rate, gold is only off really $100 from its recent highs. It's still positive in Canadian dollars. Silver's definitely down. We just discussed the reasons why. But now it comes down to, can you get it? And by the way, I have to say kudos to you, Paul, because you've always said it's better to be a month early than a day late. And when we watched all of the product disappear, those words never rang more true. And the fact is, yes, we do have some product, but we do have to manage that inventory. And so what we're doing right now is creating a wait list, because you have product, but you don't have the means to replace it just yet.
No,
right?
I up to last week, I was placing every order that we took at the current price, whether it was $13, $14. We were ordering the merchandise. Then the wholesalers that create the market. Remember, wholesalers just work on the spread. There's a bid price and there's an ask price. there's an awful lot of expense in physical silver, not paper, in physical silver. The logistics to ship it, to ship a 100-ounce bar is £7. To ship a 1,000-ounce bar, it's £70.
And now is there any shipping at this point?
Well, FedEx won't pick up and drop off.
Okay.
UPS won't pick up. The post office, I'm pretty sure they can't be far behind.
Yeah.
Where everything's going to come to a standstill. I can't even go to the depository. I used to go basically every day, whether I'm putting product in or going out. Taking customers to the depository to see their product. They won't even allow us in. Their hours have changed, from 9 to 6 down to, 10 to 2. Obviously, they have to service the banks because in our depository, a lot of banks hold a lot of inventory. Because remember, downtown Toronto, the banks don't have huge vaults.
Well, I mean, listen, coming up in the show, we're going to talk about banks and their gold and paper versus physical. Let's stay on this topic with the actual physical market because it has dried up. You know what? Let's do it in the next. Go ahead.
Yeah, but just to interrupt you, I sent you this morning from Questrade, who we partner with. In registered accounts with its RSPs, TFSAs, I showed you how much product the wholesaler put into Questrade today.
Yeah, they fulfilled the orders, which was fantastic.
It was remarkable.
Yeah, so let's talk about that when we come back. You're listening to The Real Money Show on Global News Radio, 640 Toronto. The phone number is 18778-SILVER. The website is guildhallwealth.com, and we'll be right back. And you're back to The Real Money Show. The website is guildhallwealth.com. The phone number, 18778-SILVER. Paul, we were just talking about the fact that what we've been really impressed with from our wholesaler is the fact that they fulfilled all of the outstanding orders from this month for the registered accounts, which their guarantee is that they would fulfill those orders within 10 days, and that's exactly what they did.
Yeah, I mean, we loaded, the receipts today. I showed you of how much product went into accounts that people bought last week at like $13.50, $14 silver, and gold at $14.75 or whatever. We're in the $1,600 range. It's already gone up. I believe the best investment you can make is gold and silver if you don't have a TFSA is to put it into a tax-free savings account. Yeah,
and just before we get into that, I mean, one of the things I noticed that the wholesaler was doing is 2 weeks ago, you could go in and you're speaking to someone looking to buy precious metals, and it was, well, what do you want? Do you want Asahi? Do you want Royal Canadian Mint? What kind of 100-ounce bars do you want? What kind of 10-ounce bars do you want? And what the wholesalers had to do because of the current price structure in the market is they've just taken all of the choice away, and now it's just 100-ounce bars.
Yeah,
1 ounce bars of gold.
Yeah, but it says LBMA approved because they don't know what delivery they're going to get. The Royal Mint is closed for 2 weeks.
Right.
The U.S. Mint is on.
It closed just before the Royal Canadian Mint. And what's interesting about that is, in the past they are supposed to continue to supply the market, and when they shut down, and this was before COVID-19, they were shutting it down. And personally, I think that's because they don't want to show how many people are buying and what the buying actually looks like, because it was through the roof 2 weeks ago.
It's the physical market has gone crazy. People are trying to get product. The price is going to go up. When the U.S. government, whether it's the Fed or the Treasury, start to give away $4 trillion or $5 trillion, what that is a confiscation of wealth. They're depreciating the value of the dollar. There is going to be a rush, and there is a rush to hard assets, and the rush to hard assets is gold, silver, natural fancy color diamonds, which is, the Argyle pinks are just going through the roof. That's portable wealth. In the palm of your hand, you can hold millions and millions of dollars, right?
Paul,
you don't need a moving truck or a Brinks truck to move, a palm full of diamonds.
Yeah.
So the next asset will be, whether it's small things and I believe, like postage stamps, very valuable postage stamps, easy to store, easy to put away, will hold its value because they're not making any old stamps from the 18th century anymore, 19th century.
Yeah, no.
The same as baseball cards. Valuable baseball cards will go up in value. It's a hard asset. Art, you're going to see a lot of wealthy people. If this virus continues for 2-3 months, it doesn't matter if Trump or Trudeau gives out whatever money they give out, it's not going to be enough. You know, businesses are closing. To give everybody $2,000 or $2,500, it will help for a month. It'll help for 2 months. But how long do you think a landlord is going to stand for not getting any rent checks if he's got to pay the mortgages? The banks are not very forgiving.
Yeah, I mean, I think at the end of the day, there's two things happening right now. There's one, the immediacy of dealing with the outbreak and the pandemic, and then there's the fallout of it economically down the road. And what the Fed is doing and what the government is doing. I mean, the government just printed. They're saying they're going to put $6 trillion into saving the economy. So, I mean, these are numbers. Do you remember when Hank Paulson asked Congress for a whole $500 billion?
Yeah,
I mean, that $800 billion, that was peanuts compared to what they're going to do now.
He had to go down on his knees and beg.
Well, now the spigots are fully open. But here's the thing. I want to get back to this price structure in the physical market. We got lots of time to talk about QE and the fallout. One of the things that I've noticed is that besides obviously the exchange has changed a bit, we are protecting against the purchasing power of the Canadian dollar as well. It's not just the U.S. But the fact that the premiums in the physical market have risen, this goes back to the question of people saying, why is the price down? Shouldn't it be going up? And lo and behold, within a week, the premiums have gone sky high. And at the end of the day, to buy gold $100 over spot, we're trading at around $1,650, means you're paying $1,750. It really shouldn't be a surprise. The difference is the paper price still says $1,650, but in the real world, to actually buy it, you're looking at $1,750 or higher, and in Canadian, you're probably close to $2,400 an ounce right now. If that would have happened a week and a half ago, everyone would have said, "Oh, that makes sense," and now it doesn't make sense. That's what's driving me crazy. People have to understand, Paul, I started buying gold well over a decade ago, and I remember paying $80 over spot. $80 over spot for gold. That's not much different than it is today. What people, I think, need to realize is that the days of the low premium, the days where the savvy investor could get in or the savvy gold buyer could get in at $40 over spot, they're gone.
Yeah, but you have to realize we're in the business. We sell physical product. We don't sell equities, securities. We don't sell ETFs. We don't sell futures. We don't sell options on futures. We sell the physical product. Something physical, whether it's 100-ounce bars or 1-ounce, 10-ounce kilo bars of gold, that product has to be shipped from, whether it comes from the Royal Mint or from PAMP, it has to go to a distributor, and there's only 4 or 5 major distributors in North America. That has to be shipped. It has to be stored. It has to be insured. It has to be handled. There's people actually have to pick up a 100-ounce bar and move it to somewhere else or whatever. That is all costs involved. In paper, it doesn't exist. It doesn't matter. It's a keystroke, and it's moved from one place to another, whether it's moved to Asia or it's moved to London or it's moved to Hong Kong. It really doesn't matter. It's a keystroke. So when you sell physical product, there are premiums and to be insured. In our depository, you're insured up to $1 million anyway with Lloyd's of London.
Right.
We have a lot of customers that do have more than $1 million, but most customers have product in the depository which you can store. It's safe, it's allocated, segregated. We sell the physical product. As we were going to talk in the next segment, we're going to talk about how to get into some RSPs and TFSAs where you're getting the physical product with the bar numbers. You can go visit it.
Yeah, and in the next segment, I also want to talk about this idea of gold investments versus gold ownership, especially with what just happened with ABN AMRO. So we do have a wait list for physical product. Feel free to give us a call at 1-877-8-SILVER, or you can contact us through our website at guildhallwealth.com. This is The Real Money Show, and you've been listening on Global News Radio, 640 Toronto. We're back with The Real Money Show, the website, guildhallwealth.com, the number to call, 1-877-8-SILVER. And Paul, we should thank people for their patience with us. It's been a crazy couple weeks. It feels like it's just starting to slow down, but our wait list for physical product is growing fast. And the reason that we're doing that is because we have to be able to manage the inventory when it starts to come in. And we're doing the same thing with the registered accounts. Now, I know you wanted to talk a little bit about the registered accounts. Before we do, I really want to bring to the attention of our listeners what happened this past week with ABN AMRO. So imagine you have a paper gold account, or you just have a quote-unquote gold account with a bank, and you get a memo from them, and it says, we're closing this business. You can sell off your gold right now, or we can sell it off for you on April 1st. Which one would you prefer? And that's exactly what happened to 2,000 clients with ABN AMRO, which is a massive bank out of Europe.
Well, they're going to turn around and give you the paper price anyway.
Right.
So they're going to give
the paper price, not the physical price.
Not the physical price, even if you purchase physical product.
Yeah.
You know, to buy physical, I told you, silver is over wholesale, almost $20 an ounce US, and gold is like a $60-$75 spread between bid and ask.
Now, wait, I want to ask you though, when you heard about this, what was your instant reaction? What do you think is going on over at ABN AMRO?
The product was never there.
I think that they probably had a bunch of calls for people saying, I want to redeem my physical product. Yeah. And they said, well, what do we do about this? We're not going to have a run on our product. It may or may not be there. We can't say for sure.
But it's a bank. They probably rented it out or leased it out. Who knows?
Well, this is my point, though. My point is just before we went to break, you're talking about the fact that we're dealing in only physical product. And I think for us, there is a big difference between gold investments and gold ownership. When you have gold ownership, no one else has a claim on that gold or silver but you. Yeah. If it's held in the depository, allocated and segregated in your name, that means you can go to the vault and personally hold it in your hand, take delivery of it whenever you want.
But right now, the vault is not even allowing anybody near us.
But at least the vault is independent, outside the banking system. The bank, they're not holding people up because they're closing things down. They're holding it up because they're trying to keep the public safe.
Yeah,
so that's a different story.
They've got to keep the staff safe. They've got to keep the public safe.
But,
I mean,
but
somebody just phoned me, and I won't mention the name of the grocery store, but it's very big, and they have a delivery service.
Yeah.
And somebody has already come up, has got the virus. Right. So,
the front lines.
Yeah.
The front lines.
It's getting, to deliver. I mean, we've had hardly anybody trying to sell their product, gold or silver.
We've had two. We had one last week with a client who had product in the depository.
Well, that was easy.
So it was easy because we could just sell it and send the check right away. The other one is a client who has the product in their own hands, and we're trying to figure out how we're going to deal with that. But that's another story. I mean, I want to get back to this idea of the investment versus physical, Paul, because I see a lot of people starting to be concerned about the fact that, well, wait a minute, if ABN AMRO can just shut it down on me, what do I really have? And so you have to understand the difference between zero counterparty risk. You own the gold, it's in your hand, take it home, put it wherever you want to self-store it. Or you have gold essentially on paper and you have no access to it. And so there's a counterparty there, whether it's a bank or an investment firm, whatever it is. And for us, there's always a very simple smell test. If you can't hold it, you don't own it. And I think we've always been very adamant about this because at this point in time, when everybody wants the actual physical product, now you're starting to find out when the water goes out who's naked.
Yeah, well, that's true. The thing that I've always maintained, it's always, even when you're buying, it's better to be 1 month too early or 2 months too early than 1 day too late.
Right. And I gave you kudos for that.
And we've, in the last 2 weeks, I've got to say, there's been an unbelievable buying opportunity to buy gold and silver. Whether you're on a waiting list, whether it was booked, I mean, we're not taking orders right now because we don't know when we're going to get a delivery. We've been told 2 weeks to 4 weeks.
Yeah.
It could be a much longer, because this virus may be a lot longer than 2 weeks or a month to, disappear. I don't think it's going to happen that quick. You've got to be a little bit nimble. We're looking after our customers, which is important. My people are working from home. We're trying to do the best we can. We're keeping our clients informed with a newsletter. We're telling them what's happening in the market. Again, there's no product. If you go to any website in Canada, basically, there's no product to be purchased. Our wholesaler has taken down most of the product, and they carry about 4,000 SKUs, and they've got 2 SKUs on the website. So it's 1 ounce gold bars and 100 ounce silver bars, and you have to pay, an excessive premium, because that's the real price.
Right. And on that point, when we get back, let's talk about where the prices are headed eventually. Let's get back to QE. Let's get back to the fallout of the economic situation that we're about to walk through and experience. You're listening to The Real Money Show on Global News Radio 640 Toronto. The website, guildhallwealth.com. Get subscribed to the newsletter. Get onto the wait list. The phone number 1-877-8-SILVER, and we'll be right back. We're back on The Real Money Show, the website, guildhallwealth.com, the phone number 1-877-8-SILVER. Thanks for staying with us. Paul, we were going to get back into this idea that we know that the premiums are going high, but to someone who might be new to this market, they shouldn't be intimidated by those new premiums, should they?
No. If you go back to 2011, silver hit almost $50. Gold was in 1930. Mm-hmm. That's in U.S. funds. We're going to go there, and we're going to surpass those figures, because, are people going to be buying cryptocurrencies that's, mythical? It's vaporware.
Sure.
You can't hold it, can't touch it.
Yeah.
I don't know whether you can actually use it. Even now, people are, the government agencies is saying, last week they said, oh, don't use paper money, it's your cash,
dirty.
It's dirt. Now they're saying use paper money, don't use the digital, you don't want to do this, you don't want to. When the U.S. government is going to give, whether it's
helicopter money,
5 trillion, 6 trillion, this is the first tranche of it. They're going to keep on printing and printing. Who's going to pay for that? Your kids, your grandkids, your grand. Who's going to pay for that?
Yeah.
Your wealth is being confiscated. Chinese are sitting on the side saying, maybe we have a new currency coming up. That's dangerous. I mean, it's really, really dangerous.
It's going to be it's going to be very interesting to see how it plays out. I mean, I heard something that, in the States, when they want to give everyone their $2,000, whatever it is, that they might be either depositing it directly into their accounts or giving them like some sort of coin, like a digital coin. And, we've seen that play out before. It was called the greenback.
Yeah.
And it was a fiat currency. And eventually, it doesn't really matter if you got a check for $2,000 if it doesn't buy you anything, right? That's the event. I mean, that's the real scary potential.
If you're going to buy a hand sanitizer for $30, it's not going to go far. People are stuck.
Right.
People tend to gouge. They always take advantage. There's a few that take advantage.
And I think that was one of the main points that we've been making throughout the show, is that that we've seen some people out on the blogosphere accuse the bullion industry of gouging, and at the end of the day, look, every bullion dealer sold out of all their inventory at the lower prices before the premiums really went up. So now the fact is that if you're going to be able to buy physical gold and silver going forward, the prices are going to be much higher. However, don't be intimidated by that, because with 4 trillion going in here and 5 trillion going in there from the Fed, I looked at the Fed's balance sheet. Forget all of that quantitative tightening and forget all of the paying off the balance sheet. It's gone. They're right back in there printing money, and it's QE to infinity. So you got to really start to think, well, yeah, I need to have some physical. Right now, our hands are tied, but in the next few weeks, product will start to come back to the market, and be prepared for higher prices. But we're not at $50 silver. Gold isn't trading at $5,000 an ounce. Paul, how many people are going to buy it at $50?
Since we've been in business since 2002, when I got into the market when silver was trading at $3.80, gold was $250.
Yeah.
People bought it, snuck home, didn't tell anybody, because they said, "Why are you buying gold, or why are you buying silver?"
Yeah.
They did very, very well. Gold and silver, as Salenti always says, gold is for your golden years. You buy it, you put it away, it's a hedge. 15% of your portfolio keeps you safe.
Yeah.
Salenti was
talking about guns, gold, and a getaway plan a couple weeks ago.
I mean, people are running out of New York, and they're going, to the shore or wherever they have their summer homes, thinking they're going to be safe. This is not going to be over in 2 weeks. Trump, if you listen to him, good luck for you. Common sense says this is worldwide. It's not going to be over in 2 weeks. I mean, I went past a bus yesterday that was packed like sardines. They weren't 6 feet away. The TTC, or even in North York, doesn't give somebody a face mask and some plastic gloves to wear. They're sitting there.
They're sitting ducks.
You are going to catch something.
And that's what happened in New York, right? It was being passed around for weeks before they even caught up to it. Where do you think the dollar heads to from here? I mean, part of my thinking is, well, if you're going to print all this money, you can certainly buy back your own dollar and push the price up.
Yeah, but you have to look. I mean, all the companies that are all looking for the bailouts, whether it's the airline business,
Bombardier just got it.
Whatever,
not Bombardier, Boeing.
They were all
they're nationalized.
Yeah, they all were buying back their own stock. 94% of the money that they made, instead of giving back to the investors or paying in dividends, they bought back their own stock so they could give themselves bonuses.
Yeah.
It's bit them in the backside, and that's what it's done. And now the U.S. government is not going to give them the money without taking a position in the company.
So if I'm reading you correctly, you think that this, there's going to be fallout. We're probably looking at not just a recession, but probably moving into a depression. But it's going to be the great cleanse in terms of, corporate criminalism and all of those sorts of things, right?
I have a friend is in the trustee and bankruptcy business. He said it's going to be so busy coming down the road.
Yeah.
He's not laying off people, which he should be laying off people right now because it's dead as a doornail. But there's going to be so many bankruptcies. How many people are just walking away from their business in the middle of the night?
Yeah. Well, let's talk, when we get back, let's talk about, how to protect yourself during these financial times, which, we've gone from euphoria to crisis here. The phone number, if you want to get onto the wait list, and we encourage you to do so that you can be in line when we do have physical product. We will give you a call. Also, get onto the newsletter so that way we can continue to keep everyone updated on physical product through the newsletter. The website is guildhallwealth.com. The phone number is 1-877-8-SILVER. You're listening to The Real Money Show on Global News Radio, 640 Toronto.
You are listening to a paid commercial program. Unless otherwise identified, the guests on the program are employees of or otherwise represent the advertiser. The opinions expressed therein are those of the advertiser and do not necessarily reflect the views and policies of Global News Radio 640 Toronto.
Welcome back to The Real Money Show. The phone number is 1-877-8-SILVER. The website, guildhallwealth.com. As you've been listening to the show, we're encouraging people to get onto a wait list, and that includes for registered accounts. Continue to open up your registered accounts to own physical precious metals. We do believe, Paul, that physical metal will start flowing back eventually. It's going to take a few weeks here, but it will start flowing back. Prices will obviously start moving up from here. However, before we talk more about precious metals, let's talk about natural fancy colored diamonds, because during that 2008 through 2015 period, we witnessed natural fancy colored diamonds on fire in terms of valuations.
Well, it's it went very soft, not the pinks, but yellows and
they just held their value.
Diamonds. Yeah, they didn't go down, but they didn't go up. But pinks did, the Argyle pinks did, and there's going to be a rush for liquidity and to have an asset which is not going to depreciate. Mm-hmm. Real estate is really at a level now, new mortgages, I think, were down about 29% in the States. I don't know what the Canadian figure was. I'm more interested in what happens in the States than happens in Canada, because when they sneeze in the States, we catch the cold in Canada.
That's an analogy we need to not use anymore.
Well, it happens though, Jeremy. You've got to be a realist. So to own a hard asset like a diamond, it's portable wealth. You can hold it in your hand. It's not going to drop in value. Most people, it's the same thing. When real estate boomed in Canada, whether it was Ontario or British Columbia, you had people, whether they were from Persia, Iran, or whether they were from Hong Kong or mainland China, they were pumping money into real estate because all they wanted to do was get their money out of the country.
Right.
Then they put up a law or whatever. They charged 15% for whatever it was. That kind of cooled it down a little bit. But again, people are looking, where can I put my money where it's not going to lose its value?
Yeah.
So would you put your money in real estate today? It's possible. If you don't have a job, and this carries on for, I don't want to be gloom and doom, but if this carries on for a little while, you've got to pay your mortgage. Sooner or later, I don't care what the government say, that, mortgage companies will be very generous with you and they let you be late 2 months, 3 months, they won't foreclose. BS. Because nobody can go on forever.
Well, here's the thing. You're bringing up a great point, Paul, which is, the bubble got pricked. Okay, we went from euphoria to crisis in probably the shortest amount of time ever. And when it comes to real estate, the fact is that the central banks around the globe, including the Bank of Canada, were lowering interest rates. That the problems of 2008 never got solved, and interest rate being low was supposed to be temporary. And it wasn't, and it fueled a bubble. So they fueled the bubble. Then they tried a couple different legislations or whatever it was, some new rules to try to quell the bubble. And then guess what? We're headed into problems anyway. And so you have to start saying, did the government make the right decisions? Should they have in 2008? In 2008, maybe they should have sent those criminal bankers to jail. But maybe those banks should have been not too big to fail, but maybe they should have been big enough to jail, split them into tiny pieces, right? Put Glass-Steagall back into play and make things right again. And they didn't. They swept it all under the rug. We've been on the air here, Paul, for over a decade. And for the last 5-6 years, we've been talking about, they're kicking the can. Kicking the can. They're kicking the can.
Yeah, but now
the can is at the end of the road.
Well, the road is run out.
So what do people do? And you're absolutely right. I think you've got to hold hard assets that are going to protect your wealth for the next decade plus.
What good is a Louis Vuitton bag to you when you don't have food on the table, where you can't pay your rent? People that have bought high-end merchandise at retail prices where they can't resell that product. If you paid $5,000 for a purse, and there are lots of people out there that do that, what are you going to sell it for when you need cash?
Yeah, again,
cash is going to be king.
Yeah, again, this goes back to the idea that the exuberance that was even as much as a few weeks ago is no longer, and so we have to wake up to the new reality that the fallout from this is going to have incredible economic consequences, and I do think that making sure that you protect yourself, have hard assets like gold and silver and natural fancy colored diamonds. If there was a natural fancy colored diamond for someone who had, let's say, anywhere from 30 to 40,000, what would you be recommending to them now? Or what would you be buying for yourself?
I would be buying a vivid, internally flawless, yellow of the highest quality.
Okay, now those are in the 50,000 range.
So, we may make a deal. We'll help some people out. But I would buy Intense and Vivid, Internally Flawless. If you are in a position where you can buy an Argyle Pink, we have stones up to $1 million in the Argyle Pinks. We really don't have any small stones. You can't find any stones because the Argyle mine is closing, and whoever's got product has just pushed it to the back of the safe. And guess what? How smart they were.
Yeah.
But again, it's how do you protect your hard-earned money? If you've got it in the stock market, you were doing extremely well. We've always said it. Whether you bought marijuana stocks or cryptocurrencies or whatever, the market's down 35% or 25%. It made a comeback. Every day I look, it's down 1,000 points, up 1,000 points, but it's still down close to 30-35%.
It's only being backstopped by the Fed. Let's come back. We'll keep talking about it. Let's talk about QE. Let's, again, comment on the physical supply, the idea of having that physical product versus paper product and what that can mean for your future. The phone number is 1-877-8-SILVER. The website is guildhallwealth.com. We encourage you to call us, email us, get onto the newsletter, get onto the wait list for your physical product, and that way we can give you all updates. We'll be right back. You're listening to The Real Money Show on Global News Radio, 640 Toronto. Welcome back to The Real Money Show. The phone number is 1-877-8-SILVER. The website, guildhallwealth.com. We have covered a lot of ground today. We've talked about the physical market, the fact that the prices for actual physical product have gone much, much higher. That's due to the fact that there's a lack of physical supply out there, and we are dealing with supply disruptions right now, given the fact that a lot of the global mints and major refiners around the globe have halted production for the next couple weeks, and obviously shipping is going to become an issue. However, we will get through that, and once we get through that, it will be back to buying physical precious metals, although I do believe, Paul, that the prices will be higher as a result. But I think the takeaway from the show today is that the prices will be higher, but that's okay. You know, it's okay if you didn't have a chance to buy silver at 16, so you end up buying it at 22. The fact is we believe the value of having physical precious metals at this point in time is almost priceless, and that ultimately the price of precious metals, just like we saw in 2011, are going to go sky high. Given what's happened in the stock market and the timetable of just how the economic impact of COVID-19 has occurred, I think that this is going to be a crunch timeline. I don't think we're going to be waiting 2 years to see precious metals hitting all-time highs. Don't forget, gold's only, a couple $100 away from its all-time high in US dollars. So we've got the physical market. We know that the physical product will come back into the market soon enough. We want people to be ready for that. We want people to be on a wait list. We want people to be part of the newsletter so that we can be in contact with them and be able to service them right away. Continue to open up your registered accounts. We work with Questrade. The product is fully allocated, fully segregated. You have the option to go and personally hold that product in your hand. It is absolutely 100% physical. You own it. And as we talked about right off the top of the show, Paul, our wholesaler has continued to fulfill those orders, which is great. Right now, we're limiting those orders for the meantime, but it will come back online quick.
I've got product on order. It's allocated to me. I can't get product until the wholesalers ship, and they get delivery right now. Even in the depository, as I said, I go normally every day, every other day. They're not allowing any visitors into the depository. Yeah. They're just working from 10 to 2.
But that'll change. It'll change eventually.
Some of the major banks have product at the depository, and they're also fulfilling orders to their customers because their customers want the product. I guess the product's being shipped rather than being picked up. But what you should do is get onto our mailing list right now. If you want to buy gold and silver, get on our preferred list. Give us your name, email address, how much you want to purchase, whether it's gold or silver. You'll be first in line for when the product comes in, and it's better to be a month too early and a day too late, because I can see silver jumping up $2-3 a day and gold moving up $60-70 a day.
Yeah.
And it will be like 2008 to 2011 where it just jumped.
Yeah, and I think
this is not paper. This is the real thing where you take the product, take it home if you want. Put it in, a safe deposit box if you've got gold. I don't recommend it because you're putting it back into the banking system. But put it into the depository, take it home, buy a registered account. If you have never had a TFSA and you've got $60,000 to buy into it, we partner with Questrade. You can buy gold and silver. It's held in the same depository. It's allocated, segregated. You get the bar numbers. This is the best way to buy gold and silver if you've never owned a TFSA. It's tax free.
Yeah, and one of the other things we talked about today, Paul, is the fact that governments and central banks around the world are just, they're beyond bazookas. They are gone nuclear with money printing and paper money and currencies out there that are backed by absolutely nothing. And the fact that we're in this crisis right now economically and financially for a lot of people is in part because they never actually dealt with the 2008 crisis and the fallout of that. So the fact is that we believe precious metals are actually still incredibly cheap. We will be getting physical product back online as soon as we possibly can to service our customers, and we want you to be in that wait list so that we can better accommodate you. One of the other things we talked about, Paul, today is also the importance of physical versus paper, because with that ABN AMRO calling its clients and saying, that's it, you can't get it, you were closing your accounts. Imagine what happens with the ETFs. Right? Imagine what happens with any of these sort of paper gold, quote unquote, investments versus gold ownership.
Yeah, because the banks also know, or like ABN AMRO, they know that if they've ordered gold all of a sudden, or silver, they know the premiums have gone up. Like it's almost 20% of what the value is, 25%. Mm-hmm. So if silver's trading at, let's call it $15, it's now $20 without anything else. That's a third. They would rather give you a check than bring in the delivery at $20.
Yeah, and it might even be that if they actually, let's say that they had this paper investment or gold investment and they actually had the physical metal, well, you don't know what their relationship is to other financial institutions and other bullion banks, as they call it, and maybe those bullion banks desperately needed the physical product because, as you know, we talked about it right at the top of the show, the paper market's based on the thinnest veneer of physical. So the takeaway for today is that having physical is the most important thing. The physical market is incredibly constrained right now with a lot of the refiners and mints being down production-wise for the next couple weeks. Delivery is going to be constrained for the next couple weeks. But when it does come back on, this is an asset that you are going to want to need to protect your wealth going forward. I believe we're headed into some crazy inflationary times.
Well, again, if you're in the situation where you've got between $30,000 to $50,000 and you do own gold and silver and you still got stocks, if you've got good stocks, they will come back. It's not going to come back tomorrow, but if you've got time, you're a long-term investor, they will return to value down the road. But a natural fancy colored diamond is going to hold its value. Mm-hmm. It will increase in value, and if you can afford to buy a pink, that's the way to go. Most people out there have used their home like an ATM machine. They've borrowed on their lines of credit. This is whether it's physical gold or silver, or whether it's a natural fancy colored diamond, you've got it in your hand. It's going to hold its value, and it's going to protect you in some real turbulent times. I think we haven't even seen the start of it.
The phone number, 1-877-8-SILVER. The website, guildhallwealth.com. Get on that wait list. Get some information. We'll be talking with you very soon. Thank you so much for listening to The Real Money Show today on Global News Radio, 640 Toronto.